good afternoon and good evening to some of you. I hope everyone is staying safe and well among these continued trying times. Thank you to the Cambodian Association of Finance and Technology and to the Monetary Authority of Singapore for putting together such a wonderful event and for the opportunity to address the audience today. It is an honor and a real pleasure to be with you today and discuss a little bit the role of innovation, the role of digital currencies, and what blockchain technology can do for financial inclusion and access to the modern financial system. By way of background, I am the Director of Policy for the Diem Association, and I'm joining you today very early in the morning, 2:30 in the morning, here from Washington, D.C., where I spent the past 10 years working for the Federal Deposit Insurance Corporation, which is the U.S. banking regulatory arm of 5,000 regional banks. So I'm familiar with banking both at the national level as well as the international level. Perhaps we should start with the current challenge or the opportunity, depending on if you see the glass half full or if you see it half empty. And I think it'll reveal where we have a common cause and where private sector innovation and the future of payments should be welcomed. Today, we start with 1.7 billion people who do not have access to the modern financial system, and this is a source of global risk. We have approximately the same number of individuals that are underbanked. Underbanked meaning they leverage alternative financial services but may have a bank account. Through a policy of de-risking, we have a high price exacted on the people that can afford it the least. But we have at our fingertips solutions and cutting-edge technologies like blockchain. But that is not enough. In addition to cutting-edge technologies, we need connectivity. We need the internet. We need global digital identities. In an environment when you have all of these solutions and items together, then we can start to move the needle from what has typically been abstract to more concrete. Over the course of this pandemic, our ability to use cash, walk into a bank, and transact typically normally has been restricted. The pandemic has underscored the need for digital solutions to exist. Imagine if telephony was still fixed. We'd have billions of individuals unable to communicate with one another. Think of going through this pandemic over the past 10 months, not being able to virtually see, talk to your family in what will amount to be more than a year. So there has been improvements in technology and there has been improvements in payment system, but today's payment networks very much look like the telecom industry did more than 30 years ago. With payments, you pay a high cost for convenience and speed, where with the telecoms, you paid a higher cost based on the distance. An international phone call just 30, 40 years ago used to cost $2, $3 a minute. In today's inflation adjusted dollars, that would be $6, $7. And today, calls are essentially free with a basic data plan or an internet connection. We've also seen a democratization of information and progress in communications and making the world just a little bit smaller with the advent of the internet. And so today, there's a misconception that money is digital because of how money flows, whether from a central bank to commercial banks, or when we send money internationally, such as remittances. What we have in place today is a digital way to count money, but it is not digital money. Although you may say that deposits that are held in commercial banks can move around electronically using credit cards and debit cards, charge cards, and some of the mobile payment platforms, It still remains the liability of private banks, who must retain reserves, appropriate deposits, really showing us that private innovation in this space and in money and payments may be as old as money itself. So when I was growing up, I was taught the basics of banking and economics by my late mother, an economist, journalist, and entrepreneur. She stressed the importance of access to traditional finance and that money was protected by the government. As a youngster, I had 4 different envelopes where I kept my money from all of my weekly chores and gifts I received. I had 1 envelope for savings. I had 1 envelope for a special purchase, a special gift. I had 1 envelope for emergencies, and I had 1 envelope just for my day-to-day living expenses. In addition, in every one of these 4 envelopes, I had different currencies. Now, that was mostly due to my family being spread out geographically. And then as I got a little bit older, my mom trusted me with a checkbook, which she taught me how to balance. And then I added ultimately a debit card and then 2 separate credit cards when I was sent off to college. Unknown to me at the time, but my mother was both teaching me diversification and optionality. Now, the complexities of my system were apparent when I wanted to go buy my special gifts with one of my envelopes, and I remember that gift very well. It was the Legoland Castle series, and there were about 669 pieces of it. In just 1 currency, I had a problem because I had multi-currencies inside my envelope. In aggregate, I had enough money, but the store would not accept my euros or my French francs at the time or my British pound. They wanted US dollars. Thankfully, I always had my dad around as the foreign exchange agent, and because he didn't like coins, I always made out better than any other type of exchanges. Therefore, I felt like I always won with my father. So the direction of travel is digital, but not to the detriment of current models. Think of what we are trying to develop with the project as an additional consumer option, where the consumer should get to choose which method of payment they want to use. I see a future where merchants have an advantage, a competitive advantage, to give discounts to consumers that use low-friction methods of payment. We may think that a few percent transaction fees that are being impacted on one side or another is not much, but I can tell you that it is a significant impact to the business's bottom line. If we look back at history, and if it's in any indicator of large-scale changes, this sentiment that we have seen today, this type of World FinTech Forum that we are participating in today, we have seen in the past. Now, we've seen in money the transition from mostly cash to the ability to write checks, then from checks to the ability to use plastic. The first charge cards came around more than 70 years ago. 10 years later, credit cards were introduced into the system. However, only a few businesses used to accept credit cards. Indeed, even today, acceptance, and let alone access to credit, is far from universal. It took time back then, and even today, there are some businesses that accept some form of payment and not other. So from plastic to digital is the natural progression, not to disrupt the industry or compete with the industry, but rather to augment payment optionality and complete the system. After all, let us remember, we have over 3 billion individuals that are on the margins of the formal economy. Today, there are more than 70% of the world's central banks that are exploring the merits and some of the risks of issuing their own central bank digital currency. We can attribute this to the need to modernize domestic payments, remove friction from the last mile, as well as take a leading role in innovating the global payment infrastructure that supports cross-border trade and remittances. Why? Well, the utility would be great to lower cost and remove that last mile friction. Digital currencies offer yet another solution that can drive down the costs, and more importantly, align with the United Nations Sustainable Development Goals that call for remittances to be lowered to, on average, 3% in the next decade, from a stubbornly high 7 to 10%, with some corridors that are as high as 30%. Shy of large-scale innovation and progress in this space, that goal will not be reached. Now, most central banks are in the early stages of exploring the use cases for a national digital currency. Some are at the retail level, most are at the wholesale level. I personally see two not mutually exclusive benefits to digitization and leveraging a technology like blockchain to innovate in this space. One, from an economics perspective, economists have argued that a central bank digital currency can improve market functioning. You may have heard the Bank of International Settlements earlier this year even state that it can improve liquidity by allowing for faster transaction speeds. The Bank of England came out and said that it can boost gross domestic product by up to 3% by lowering transaction fees. On the human perspective, in many emerging economies, national CBDCs are looked at primarily to increase financial inclusion by allowing governments to include the unbanked population into the digital economy. More than half of the unbanked individuals have an internet-ready phone. So if a mobile phone can become a regulated payment endpoint, it's the start of economic mobility for billions of people. Today, the vast majority of money in circulation is privately issued, whether it's in the form of the two-tier banking system, through fractional banking, through lending, through credit, through instruments that are in effect a result of private sector innovation and participation. What we are seeing today is digitizing that model of exchange that has historically been analog. This should be done in a technological neutral, principled, and activity-based way. The Diem project has embraced that approach. Just a few days ago, in marking the next step in the evolution of the project, we renamed from Libra to Diem. Diem is Latin for day, and with it, we are hoping it signals a new day for the project. We have a new vision to enable universal access to financial services, and with it, an updated mission. The new name Diem is an additional step in marking the independence of our project and in support of the leadership's new commitment to enhancing the security and regulatory compliance of the global digital payment system ahead of its planned launch. From the initial stages of our project, our intent was to complement and extend fiat currencies, not compete with them. Digital payment system infrastructures like the one that we're building today would be complementary to the current system and the future potential digital currencies, adding something I spoke about earlier, greater optionality, while reducing the cost of financial inclusion to billions of people. The reality of our project is that it is open source and interoperable. There are two big ways in which I see it advancing the market. One, it pulls additional individuals into the modern financial economy. And second, it will flatten the entry barrier into the FinTech world. With an open source type technology like the one we are employing, individuals can build on the network over time. The current challenge with the system that we have in place is that it truly is not inoperable. Imagine a world where my email domain was different than your email domain, and it could only communicate with a similar email domain. Or if on top of that, I had to add a layer of fees, where if I wanted you to read my message within 2 days instead of 5 days, it would cost me more. Essentially, that is the way the current payment system operates today. What you see in the financial industry today are replication of siloed solutions that do not typically transact with one another. And from a consumer and merchant experience, that has led to more difficult barriers to entry, as well as less competition. Since the project's initial announcement in June of last year, we have made significant efforts to collaborate with key stakeholders around the world to ensure that we are building a more inclusive and innovative payment system. Innovation and regulation are not at odds with one another. One clear message we heard from regulators over the past 18 months is that a system like ours needs to be upgradable to future technologies. For example, one day, we are hoping to be able to plug straight into national central bank digital currencies. The posture we have taken from the get-go is that we are asking stakeholders, regulators, authorities, and international bodies for permission rather than for forgiveness. This has to be a key part of the design principle here to ensure that we extend the perimeter of payments and that we are able to support these types of cross-border use cases and ensure that they are done in a manner that is consistent with regulation. In closing, digital currencies and payments innovations are here to stay. They'll provide one more ways for customers and businesses to interact with one another. As a consumer today, I still walk around with my wallet. And in my wallet, I have a little bit of cash. I have a blank check. I have a debit card. I have 2 credit cards. And in my other pocket, I have a smartphone. If I had a choice, digital through and through would be mine. With that, I wanted to thank you and thank the audience for the opportunity to address this group. And I turn it back over to the master of ceremony. Thank you again, and have a good afternoon.